All right. How many keys are there to getting your keys?
4.
Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us in 2020. Happy New Year, everyone.
Thank you.
Thank you.
I can't believe we made it this far.
I know. Did any of you guys think that we would actually make it to 2020? Who knew, right?
No,
Who knew?
I
Did I think that way back when in 1980 that I would be still doing this
were born in
2020?
You were born in 1980?
No, I started in this business in 1980. I don't tell very many people that, so keep that under your hat, okay?
I was still in preschool in 1980.
No, shut up.
All right,
2020.
So you want to talk about forecasts, or you want to talk about what we were doing in the 80s?
No, I don't want to talk about the 80s. It wasn't necessarily a really good time. Interest rates were 18%. Does anybody remember that? I do.
They were 18%?
18%. Prime was 21.
Stop it.
I swear to God.
What year was that?
1980 when I started in the business.
Wow.
Wasn't that busy. Imagine that.
Wow.
But of course, the price of a house was $30,000.
Wow. So your payment was still like $200 a month.
Yeah, that was crazy.
Wow.
I know. We wrote 30-year mortgages that were expiring or maturing in 2010.
So
and I
those
can remember
people have
saying,
been
oh my
debt-free.
gosh, that's so far away.
Assuming they haven't refinanced, they've been debt-free for 10 years.
Let's hope if they were at 18%, they've refinanced.
You know, it's so funny because that's in the forecast of what we're talking about for 2020, how long people are holding their homes today. And it's funny how that trend is changing,
right?
More so than you think. And our real estate professionals may not want to know this, but people are holding on to their homes longer.
Yes, much longer. So the average that somebody held on to a house 10 years ago,
just
somebody, peeps, all my peeps out there, the average homeowner stayed in their home for 8 years. That was about 10 years ago, 2010. The average time someone held their home was 8 years. Today, 10 years later, the average time is 13 years. So why, you might ask?
Yeah, what's the reason for that? I mean, I know we're obviously in a rising market price-wise, and that continues to. So are people improving their existing homes, adding room additions, finding out, they were maybe because they were locked in at a lower rate from a long time ago and they don't want to move because it costs more to move?
Ding, 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 ding.
Oh, I hit it.
Probably all of the above. I think, there's a housing shortage going on, and that kind of goes into some of the predictions for 2020 that we were just going to touch on real quick. So some of the predictions are, first of all, interest rates are going to remain low, maybe even a little bit better. They're going to stay in the somewhere between, they feel 3.5 to 3.9, so which is good, which of course has been increasing refinancing. If you guys haven't done it already yourself, you probably should look into it. Give me a call. Happy to run numbers with you. Like how I just slid that
little plug there for
slid
yourself.
That right in. Anyway, but with the interest rates being low, people are refinancing, pulling some cash out, maybe doing some home improvements, adding a pool, whatever it is, because there's a housing shortage.
Right.
There's not a lot of houses on the market. So unless you wanted to go, build, and there's a lot of building going on in our area, as we know, then people are kind of staying put. They're pulling some cash out and doing the fixing up that they have because they're finding that what's out there isn't necessarily better than what they have or what they can get.
So bottom line predictions, mortgage rates are going to stay level or even slightly possibly decrease for 2020.
Which, of course, is going to increase the refinancings even more.
Okay.
So then they say on the flip side, the predictions for 2020 is that the housing shortage is going to continue and possibly even get a little bit shorter because with interest rates so low, people are locking into these interest rates in the 3s, and people buying houses are getting interest rates in the 3s. there's no incentive to move.
Right, right. You know, it's funny you
Why
say
move?
that.
You've really got,
because
got it made.
I know this has happened. We have people we'll pre-qualify a house on. They're all excited, and whatever house they were looking at, they didn't get the deal they wanted. They couldn't get the closing costs they wanted. So
Yeah.
all of a sudden they said, "Oh, you know what? We're just going to stay put." I mean, how
Exactly.
it happens a lot.
Yes.
You
Yes,
know, they're
it
like,
has.
you know what? We're just going to stay where we're at. We don't want to deal with it. We don't want to move. And I've heard that a lot lately. So
Yeah,
there's good
same.
there's viable reasons for those things to happen.
Yeah. The things that we obviously, you guys are seeing as well out there is the peoples who are the peoples who are who are consolidating their families. Parents moving in with children. That kind of thing.
More of that going on.
A lot of that going on. I've seen a lot of that in the last year. So, and they expect that to continue as well. So,
And millennials are buying. That's your
they definitely are.
Yeah.
They're not. They're all moving out of the basements of their parents and
and they're
looking to
they're
buy it.
getting out and they're looking to
And
buy.
with the interest rates being low, they qualify for a little bit more house now.
Right.
Of course, it's harder to find that house because the lower the interest rate, the lower the payment means that they can qualify for more house. So all of those positive trends are definitely going into 2020, and we're very excited about that. We just got to hope that there's houses out there to sell them.
Exactly.
We
And
got
you
to
know-
talk those sellers into selling.
And the biggest demand right now are for the millennials in those suburbs. They want
Right.
that easy living.
Urban living, yes.
They don't want to mow the lawn. They want to have something all
Right.
taken care of. So townhomes, villas are very popular.
Mm-hmm.
Condos are really being sought after because condos, as you know, lower price point.
Yeah.
Because you got to get that HOA approved too.
Yeah.
So, and now there's some more and more creative programs back out there for people to consider getting back into that condo market again.
Well, and actually, it's funny you should say that because Fannie Mae and Freddie Mac have actually made some changes now. After the crash, any of you have been around for a while, Fannie Mae and Freddie Mac stopped doing. They were not lending on condos. And a little at a time, they've been coming back into the market, but they're pretty strict with their LTV. They want 10% down. If it's an approved condo, if it's not, they're looking for 25%
Right.
down. They're
that
being
limited
very.
review program became very popular.
And for a long time, they were not, and FHA also not adding any new condominium complexes to the list, especially FHA.
To the approved list.
Not adding any more to the approved list. Well, they've changed that, and now they're actually even starting to do one-offs. So perhaps not the whole complex is getting approved, but they're going to approve this particular unit because it meets everything. Not necessarily that they're going to do the entire complex, but this unit.
Right.
Now, I do understand that's a brand new thing that Fannie and Freddie are just starting to do, and I do understand it's not easy to get that one unit approved through, but it's at least they're looking at it and moving in the right direction because they recognize it as well. The
Right.
millennials want to buy
Right.
that easy, clean living.
And I can understand it because we're all busier.
Yeah.
Lifestyles change.
I got somebody cutting my grass.
Yeah. And it's,
Just saying.
and it's not your husband.
It's not my husband.
Wow.
Interesting.
Interesting. Well, you know what? It's good to know that. So, in summary, 2020 looks like interest rates will remain stable or
Yep.
lower. Inventory will be tight.
Yep.
Millennials are in the marketplace looking for that, urban living.
Yeah.
And inventories, being tight is going to drive up prices. So it's just
We're all in for another
kinda-
banner year. That's what I say.
It's kind of that same trend we had in 2019, really.
Right. It
you
is.
know?
It is.
And I think interest rates were predicted to go up last year. And remember, they
And they did
really
not.
didn't. No, they actually came down. So that's good news for the real estate
Everybody
market.
thinks that we're in for another banner year, which is really great. So we all love to hear that.
Yeah. Of course, this is an election year, which can cause uncertainty.
All kinds of tizzies.
Yeah, the threats of war.
I know.
The political environment can make interest rates really erratic.
Mm-hmm.
So if you find a rate right now you really like and you're comfortable in payment, my suggestion is
Lock.
go ahead and lock it in. Get
Lock.
it locked in, and you're going to pay a little more if you do pricing over 30 days. Just know that. And of course,
But it's better to be safe than sorry. 'cause
lock it in because you just don't know.
Yeah.
And a lot of companies now offer that float down feature. So where
Like
you
us.
can you can lock in a rate, and if rates you think they're going to go lower. You know what? we can relock you at the lower rate. So,
I want
so
one of
look for
those
that.
flashing arrows right now. Call me, call me.
You're so funny.
Sorry.
That's hilarious.
All right, so let's move on
Yeah,
to.
And you know what? One more thing I want to say about the year.
Okay.
Everything is going paperless this year. It's going to be a digitized year.
Yeah, how cool is that? You guys have, anyone who's done closings with us, boy, I'm really unplugging us. No, but really, because we've gone to our closing packages are all digital these days, and I know a lot of other people have too, but a lot of title companies have said to me, wow, this is like the easiest closing we've ever done with the mortgage firm because everything's digital these days. So like, half or 3/4 of the package is electronic signature. So, we're only really hard signing, wet signing the note and the mortgage and, a handful of documents. So closings go pretty fast.
Yeah, it's pretty. So,
And it's getting even more. They're really doing some. I'm excited because we just came from our sales conference, and there's some really exciting new technology.
wait till you see our new app, folks,
I know
for pre-approvals.
new technology on the horizon that we're very
Your
excited
realtors are going to
about.
love it. Your buyers are going to love it. You're going to get a text message, and you're going to have your pre-approval in hand, and you.
And if you need to change it, you can do
you
it
can
yourself.
do it yourself. You want to
How
see your
about
new
that?
payment? You can. The realtor wants to see it. They can too. So it's pretty cool. Good stuff.
Not that we don't love talking to you when you call us to say you need
but
one.
you know what? When it's 12 o'clock at night and you want to know, hey,
And-
what will my payment would be? And what if I increase
Right.
my loan amount by this much? Your pre-approval will automatically change with it as long
Automatically
as you don't
go.
exceed that maximum
How
payment.
cool is that?
Good stuff. All right, now
Good stuff coming in 2020.
let's talk about the 4 keys to getting your keys. I know this
So
is stuff
speaking of when you buy a house.
You love talking about this stuff.
I
So,
do. So when you are buying that house, millennial
even
or
know why-
non-millennial,
honestly, come back to me, please. I don't even know why I'm here at this point, okay? Because this is going to be all about DeLynn. I'm going to tell you right now, because she's going to get passionate about this. You talk about rates, I'm in. You talk about the political
markets.
environment, I'm
political
in.
environment, that's you. I know.
You talk about inventory, I'm in. When we
But-
talk about the 4 keys to getting your keys,
Talking about what does it take to
Yep.
get us from contract to a closing table as quickly as we can.
can I say one?
Yeah.
Your first key,
Yes.
income. All right, I'll see y'all next week.
So I call it the 4 keys to getting your keys. 4 main things. I know you guys as the realtors know this, so pass this on to any buyers that you have, because there's 4 things that are the main keys before you can buy a house and get your own set of keys. Obviously, income, like Barry said. Go ahead, talk about income. Look, he's tweeting right now, so he can't. He's got
Giving
his
you a
phone in
little
his
light.
hand.
Oh, you got to have income
You
to
wanna talk
qualify.
about income?
I do want to talk about income. I just wanted to get that in. I got my flashlight on. So, no, I'm not tweeting either. So, income is obviously part of the qualification, and there's certain income guidelines you have to meet. Not everybody in today's world, I know this will shock you, DeLynn, is a vanilla borrower.
Right.
Meaning they're W-2, they have taxes taken out. Income situations can get complicated. If you get bonus, if you get any kind of commission, you have to have a history of that in order to count it. Even a second job on your income is another part of it. People say, well, I got a second job, so I make more income. Well, when did you get that job? Last month. Well, you can't go pick up another job to qualify to get more income to help you get more loan. You must have it for at least 2 years. So that's a big part of the income equation.
It is.
And self-employed people, obviously, you know what? You might make this much, but if you're only claiming this much, guess how much we got to qualify you on? This much. So keep that in mind. Now, there are bank statement programs where you can count income now. Alternative programs, we'll call them. But income is the first key to getting your keys.
And one note that I do want to make on that, one of the misconceptions out there that a lot of people have is, well, I haven't been on my job for 2 years, so I can't get a house yet. Not true. You could be on your job. I mean, we did it remember we closed one girl, she had been on her job 1 week. As long as you've been in the same line of work. So, if you're a teacher and you're teaching for Pasco County and then you move to Pinellas County or something like that, that's fine. Or a nurse, you went from this hospital to this hospital, absolutely fine. So as long as you're in the same line of work for 2 years, that's what we're looking for. Not necessarily the same job, but same line of work.
Or if you had, if you're coming out of school, you're a graduate.
Exactly. That counts as well. How cool is that?
So you can be going to college or a trade school. Just provide us with proof of that. Get a job day one. Boom. You qualify under that income. So that's
Right.
kind of nice. And there's also now the ability to do what we call expected income. So you're expecting a raise or you're getting this promotion. We can actually count that in some instances as your income. So
There's some really cool things with income. There's
Now-
also what's called trailing spouse. That one we haven't used it in a while, but hey, it's available. So we down here in Florida, we have a lot of people moving in from out of state. Maybe the husband got transferred and the wife, again, teacher or something like that. The fact that she is employable and can get a job, we can actually use her income that hasn't even started yet. It's called trailing spouse income.
that's pretty cool.
That's very cool.
And of course, Social Security,
So don't count those people out.
pension. If you have retirement, we can be creative and helping you structure to make sure you qualify for the proper amount of income. So
Right.
that's the first key to getting your key.
We're pretty creative with that income, so
Yes.
all within guidelines. Okay, the second key.
Oh, can I say one more thing about
Yes.
income? Because do you still get people that say, "What about stated income?"
No such thing, okay?
Yeah.
Get that out of your head. We're
It's
not even
not-
going to go
and-
on a big
and
tangent
and
with
you
that.
know it's so funny
No.
because I get emails from these hard money people that say
I know.
stated income, stated assets. It's really not. It's hard money.
Yeah,
So there
that's
is
all
a
it
difference.
is.
Under the laws,
The law.
The
It's not.
law.
It's not Fannie
It's
Mae.
not-
It's not Freddie Mac.
it's not
it's
me. It's
the
not DeLynn.
law.
It's not. It's not us.
It's not any lender.
It's the law. You must prove the borrower's ability to repay. It's the
Right.
law. No
It's
way
the
around
law.
it.
No way
So,
around it.
Anyway, that's my income pitch. All right, let's
Okay.
talk about next.
Key number 2
Ba-ba-ba.
to getting your keys is debt. So we talk about who do you owe? Car
Who
payments,
do you know?
student
Oh,
loans,
that's-
personal
oh.
loans, credit union loans, furniture loans, any kind of loan payments we're going to take into consideration. So we need to know that so we can do the debt ratio, obviously.
What about if
And
they
then,
co-sign?
and then even if they co-sign, sometimes there's some caveats to that, but we definitely need to know about that as well. Also, alimony, child support, and what they call separate maintenance, which usually means IRS. If you have IRS payments, these are the things that we need to take into consideration along with credit card
So
payments.
let's back up on that because let's say you owe money on a previous year's tax returns and you have a payment arrangement, but it doesn't report on your credit.
It doesn't
to the
report on the
IRS.
credit. In most cases, it does not, but we do have to take that
And it's
into
gonna come up.
consideration. It will come up. We do this little thing called the 4506T where we verify through the IRS
Again, it's the
your
law.
returns. It's the law. So it does come up. So that's why I ask right up front. I ask like every question I can think of right up front. So
Even
that
when they
there's
don't
no
qualify, she's
surprises.
going to ask.
He gets mad. He says I spend too much time on the phone with people.
Who don't qualify.
Moving on.
Yeah,
So those are the debt
that's
things that we
okay.
do.
They think you're friendly.
I am. Well, I
we
try
get-
and help them if
No,
they,
it's good. We want to help everybody.
We do.
But some
So-
people just aren't going to qualify for a loan.
And I try and find ways, like you said, if they co-signed or something like that, you try and find little ways that maybe you can. Anyway, so moving on, debt rolls right into credit. So what is their credit? Is it good, bad, indifferent? If it's something we can help, again, he
What's-
says I spend too much time on the phone with people trying to help them,
Well-
give them some tips if they're low right now.
Okay, if they have a 2, that's their credit score. You should have already been done and said,
Bye-bye.
Call me when you get to a 3. I'll talk to you longer. No, I mean, credit's a big part of, and you know, your credit affects everything in life today. So what do we need right now?
Some lenders are at like 660s, 640s.
Yeah, and there's no real hard
For
line.
the most part, Fannie
Five-
Mae and Freddie Mac conventional loans
620.
are 620.
Yeah, some FHA you can get down to 580.
FHA, you can go to 580.
And with limitations. But
Right.
Although,
And I will say, you know, if you're below the 620, the world's going to be a little bit harder, a little bit stricter. So, which, you know, it makes
It's
sense.
fine. It's doable.
It makes sense, but it is doable.
That's good to
Yeah.
know.
So that's as far as credit goes. And if there are ways to help, we do try and help them, raise their score, little tips
Right.
sometimes we can give them.
And you start getting judgments, collections. Sometimes they may have to be paid.
The biggest thing that we ask people with credit, don't do anything without talking to us first. And I usually, it's like the last thing I do. I can't stand when these people call and they'll
DeLynn,
say,
I'm going to
"What?"
get a drink of my water. I'm talking to you first.
Apparently, I'm getting on soapbox. I don't like when they call, whatever bank or whatever mortgage company, and the very first thing they do is pull their credit. That is not what the very first thing I'm going to do. I'm going to ask them questions first,
Right.
because I'm not doing them any good dinging their credit right now.
Right.
If they already have a copy of their credit report, or if they already know they're at a 550 because I had a bankruptcy yesterday, or something
Right.
like that, there's no sense in doing that. Instead, I'd rather just talk them through quick, easy tips and things to do to raise their credit score. And if it's something that's beyond my capabilities, that I think that they need some, major coaching here, then we have a credit assistance company that we've referred some business to.
And even in
help them.
our credit system, it can tell you, where potential points
Right,
can be
potential
earned.
how much it can go up.
So that's
So
kind
we
of the
definitely
cool.
have some tools that are available to
Yeah.
us to help them with that. So again, we don't like writing those people off.
You do not need stellar credit to buy a house.
Right.
That's the bottom line.
And if your credit is so, don't worry about it. Just talk to me. Maybe I can tell you a couple quick little things that can get that score up for you. So
Yes. So your rate will be affected by credit. That's the biggest impact.
yeah, and the rate's affected.
So, all right, next let's talk about the fourth key.
The fourth key, because credit, of course, was third.
Right.
So the fourth key, assets.
So you got to have money.
How much money you got in the bank?
Wow.
Bottom line, how much money you got in the bank?
Yeah. You know what's so funny is that people say, well, I'm going to get paid and I'll have like $2,000.
I know.
And they have nothing really right now. So what do you got now? I mean, I know we can
Right.
count that as coming.
And
We can show it.
And the other thing, we have to be specific with people, because, you can't just say how much. I used to say, how much do you have to put towards the transaction? And they'll say, oh, I have $20,000. And then I find out into the middle of the transaction somewhere that $20,000 is in their mattress.
Wow.
Not gonna happen.
That's a nice mattress.
Lumpy, good lumps. So we have to be pretty
That's
specific
funny.
and let people know. And we do have a lot of documentation that we give clients right up front when we're pre-approving them, walking them through all of these things about, how much money is needed exactly, what closing costs are, how much money is needed for closing costs, how much money is needed for down payment, and telling them to be very careful with any kind of deposits that go into their accounts,
So-
and transferring of money. Man, does that drive our
So the
people
biggest
crazy.
thing is whatever the bottom line number is, you must show it available before you go to closing.
Or we have to know where it's coming from. So if you don't have it in your account, but mom and dad are giving it to you,
Yes.
that's fine, as long as I
Yes.
know where it's coming from. Or maybe you have a house that you're selling, and I know it's coming from that, and you're going to close on one house in the morning and buy your other house in the afternoon. That's fine, as long as we know where the money's coming from, and we can have a paper trail of it. We're in good shape.
That's pretty cool.
Yeah.
So 4 keys are income, debt, credit, and your assets.
That's it.
Boom. You
Those
have
are the
all
four
those things?
Most important things.
And a good realtor and a good lender, and you might close a deal.
And if you don't have all those things, call us. We'll
We'll hook
walk
you
you
up.
through it.
Yeah. So good information, though. I like the predictions, though, for the year for 2020.
I know. I do think it's going to be a great year. I think it's going to be another banner year. I know that, this year was a very good year for a lot of people.
Right.
It took us a long time. We took a big hit in the mid 2000s there,
I know.
We all took a big hit in, 2007, 2008, 2009.
Yes.
It was hard. So it's nice to see it coming back, and people had a good year, and that's good.
Yeah.
And I'm
it's-
excited that it's going to be another
and
good year for
it's
people.
not going to go away.
Right.
It's not. So
Buckle
you
up.
see something you like, get your offer in. All right. So upcoming, you know what? I'm really excited because next week we're going to have a really great show. We'll talk about community events, but don't let me forget to tell you about next week's show. It's going to be a good one.
Teaser.
Yeah, it really is. I mean, we
Spoiler
have a really,
alert.
Yeah, we have a super special guest coming on. And
Are you going to tell them who? Or are you just going to let it hang out there? Nope, he's going to let it hang out there. You have to tune in next week. We do
Yeah,
have a
it's gonna
super
be
special
good.
guest coming
But we
next
are
week.
going to talk about homestead, portability,
Mm-hmm.
and it's going to be important.
Yeah, so
for you
just
all
as
to
a
learn.
reminder, yeah, let's just mention that real quick because we are in January here. So anybody who had bought a house during 2019, make sure you apply for your homestead. If
Yeah.
you haven't already done so, if you owned a home as of January 1st of last year, 2019, make sure you apply for your homestead. You have until March 1st to do so. It will affect your taxes in a big way.
Yes.
So you're going to want to do that.
Yes, absolutely. All right, let's talk about upcoming events real quick. So we got a couple of things coming up. One with West Pasco Business Association, WPBA. We got a lightning bus trip coming up. We're going to
On
meet
February 13th,
February
is it?
13th. Good job, DeLynn.
Yay!
Well, you just knew it was the day before Valentine's Day.
Somebody told me.
Yeah, I get it. So,
So I think this is funny. I
go-
just got contacts. Y'all like these? And my
Yeah.
phone, face recognition doesn't recognize me.
are you serious?
I know I have to put my code in there.
Oh my
Anyway.
gosh. So February 13th, we'll be meeting out at Flamestone Grill in Trinity, and we'll be going on the bus to see the Tampa Bay Lightning play. So
Yay!
go on WPBA.biz. And
you can get tickets.
And reserve your seats.
Always
Limited
fun.
supply, be good. And then, of course, we have our lunch and learn.
That's what I was just looking
in
up.
February. And
The
it's
11th.
February
That is
11th.
on February 11th.
And this month is going to be stellar because we're going to talk about mortgage
Really exciting.
and title, and it's going to help you grow your business. We're going to show you how and teach you some of the, how to avoid some of the pitfalls that go on
Right.
out there.
And one of the biggest questions I get, what exactly is the difference between a pre-approval and a pre-qualification? Let me answer that for you.
I know. You think I was in the office next door, so. Anyway, it's going to be great.
So that is February 11th,
Make
as
sure-
usual, at Carrabba's, 11:30.
And please go-
Carrabba's in Port Richey on
Please
19.
go on our page and like it and reserve
Yeah.
that you're coming. We had like over 70 realtors show up and like 40 RSVP. So for the 30 of you that came that didn't RSVP, thanks for coming. But next month RSVP too. We'll
But the
feed you either way.
servers at Carrabba's and the cook sure would appreciate a little heads up on how many people are coming.
So have a great week, everybody.
Thanks for watching. We are Today and Every Day.
Moving forward.
Bye-bye.